Hello everyone, happy Wednesday. I hope you've all had a wonderful week so far. As always, we've got a lot to get into, and as you can see, we are currently in a hotel in Croatia. We are moderating at a conference here where you're going to have the likes of the ECB, advisors to national banks. You're going to have a lot of very important people that are kind of playing instrumental roles in this kind of transformation that has distributed ledgers at the heart of it. So very excited for that. I don't know if you guys can see the view. It's not the best picture. We are still using, although we do have the cameras, the laptop camera, just because the lighting isn't great in here. So I do apologize for the camera quality, but as always, we've got a lot to get into. And we've got some really interesting news involving Solana and Western Union to start with. Yesterday, we saw the launch of a Hbar ETF by Canary and a Litecoin ETF and also a Sol ETF. We're going to be showing you how those went. And the Solana ETF did well, as expected. The Hbar one, perhaps not so much. And I want to put it into context that this is kind of the first altcoin ETF outside of Ethereum, and the Litecoin one really underperformed. In fact, Hbar was 8 times as large as it in terms of inflow. So we will be taking a look at that. Also talking about some macro stuff. I'm going to talk about commodities to you guys and what that might mean for the broader sort of asset landscape. You guys know that I think we're in a sort of risk-on environment. I think the S&P is now in a kind of new bull market, having had a bear market this year. And ultimately, we looked at the Fed's kind of playbook this year and how there's only 2 times in the last 50 years they followed a similar playbook. One was 2024. The other was 1998. And they both led to 1998, a 30-something% rally for the S&P into the back end of 1998. And 2024, I think, was something like an 18% rally. So I think we've got a good time ahead of us. And of course, crypto should benefit from that. Maybe commodities and what they're looking to do. As they really are, you're looking at commodities against dollars. We look at assets against dollars. Maybe there's a correlation there and further confirmation in regards to what we're expecting. And then we'll finish things up with a take on inflation, because with interest rate cuts, people are a little bit worried, rightfully so, that inflation may raise its head. Let's kick things off with the biggest news over the past 24 hours. And as you can imagine, crypto Twitter has a lot to say. There is no bridge currency. I wonder who that's taking shots at. There are stable coins on Solana. I love you. And we'll talk about there is no bridge currency in just a second, because I don't believe that stable coins eradicate the need for an intermediary when you're talking about going from one currency to another. Yes, stable coins truly innovate money. They can make capital more efficient because you don't need to have it in transit. It's instant. You can, there's a hell of a lot of efficiencies that come with stable coins. Cost reductions, obviously time, so on and so forth, a removal of intermediaries. Western Union talking about implementing this to sort of not boycott Swift, but circumvent some of the reliance on Swift, which is interesting. Again, Swift moving to facilitate their own distributed ledger. But when you talk about going from one currency to another, how do you enable that? And if you're going to do it in a kind of crypto-enabled way, the way that we transfer one value to another at the moment is through DEXs, and they use liquidity pools, which essentially requires dormant capital that isn't dormant in crypto because you can earn yield on it through providing that liquidity, but you still need to lock and have those pools, whereas XRP is still trying to be the kind of intermediary in between, meaning that you can have this kind of asset that can play a role as a kind of world reserve bridge currency. And I don't think that gets eradicated with stable coins. I think stable coins solve really domestic issues. But when you're talking about global trade in multiple different currencies, unless the world is just going to adopt US dollars, you're still going to need a bridge currency. Anyway, just my own take on it. Western Union announces USDPT stablecoin in Solana and digital asset network. The Western Union company today announced its plans to launch US dollar payment token, its new stablecoin, and an innovative digital asset network designed to bridge the digital and fiat world, enabling real-world utility for digital assets, built on Solana and issued by Anchorage Digital Bank. Anchorage also applying, by the way, a little bit of trivial here for you, for a FedMaster account, along with Ripple. And I do think they will get that. You know, Fed Waller at the conference that we had last week did talk about allowing these kind of Fed Lite accounts that would give provisions for crypto companies, make them eligible for it. And that would essentially give stablecoin issuers the same power that banks have to create money and issue them as stablecoins, which you know is being sort of adopted by the US government. You talk about what Scott Bessent has had to say, you talk about what Trump's saying, so on and so forth. Western Union aims to launch USDPT, expanding the way to move money for customers, agents, and partners, and to support the company's treasury capabilities. This brings together Western Union's global digital footprint, Solana's high-performance blockchain technology, and Anchorage Digital's industry-leading, federally regulated stablecoin issuance, platform, and digital asset custody solutions. Western Union will provide users with access to digital assets and will enable the ability to send, receive, and spend and hold USDPT through a seamless user experience supported by the company's global compliance and risk capabilities. The CEO and president of Western Union goes on to say, "We are committed to leveraging emerging technologies to empower our customers and communities. As we evolve into the digital asset space, Western Union's USDPT will allow us to own the economics linked to stablecoins. Separately, we are excited to announce our digital asset network, a solution for the last mile of crypto's journey by partnering with wallets and wallet providers to provide customers with seamless access to cash off-ramps for digital assets by leveraging our global network. Our digital asset network and USDPT will be an enabler in achieving our mission to make financial services accessible to people everywhere." So this is huge news. It's bullish for the crypto space as a whole, I think. Ultimately, this technology is going to be adopted because of the inefficiencies that it solves. And I think that Western Union is just in line with the broader trend. Yes, it's happening on Solana, which is great news for Solana. Solana is, and we'll talk about how Solana's first ETF did. It didn't beat Ethereum or anything of the sorts, but it did quite well in comparison or generally, and we'll talk about that. But the world is going to embrace this technology. Money is going to run on public distributed ledgers. We've always said that. Solana is obviously a clear, and what Western Union are doing with it, a clear indication of that, or further confidence of that. The bridge asset comments is interesting. It's my own personal opinion that you still need a bridge currency when you're going from one currency to another. Unless the only world you would kind of live in where you don't need a bridge currency is one where we all just use one currency and our nation's going to accept that. I don't believe so. Maybe in the future if orchestrated, but for now I very much don't think that's the case. So huge news. Yesterday also we had the launch of BSOL, Hbar, which is Canary's Hbar ETF, and LTCC, which is Litecoin's ETF. Here are the final results from yesterday's trading. Final tally of day one of trading. BSOL did 56 million. Hbar did 8 million. LTCC did 1 million. I can't believe how close I came. ETF 6th sense for the win. Wish there was a poly market for this. I'd be rich. And this is Eric Balanchunas and what he predicted. Big day, half an hour till post time. 3 coins are getting first 33 act spot ETFs. Time to guess day one volume. Feel free to reply with yours. Winners gets a retweet plus pride. Here are mine. BSOL 52 million. Hbar 8 million spot on, and Litecoin 7 million. And of course, these were the closing results. Litecoin 1 million. Major undershoot. Hbar beating it by 8x. He goes on to say, BSOL's 56 million is the most of any launch this year. Again, the kind of appetite for crypto. More than XRP, R, and SSK, IVES, and BMNU. And what's amazing is it's seeded with a 220 million it could have invested seeds on day one, which would have results in the 280 million-ish range, would be even more than Ether A. Ether A's debut, strong start either way. So yeah, so if you would have the sort of seed investment of the fund, which is already in there, it doesn't go on day one, which only had 56 million. If you had had that on day one, which they could have done, you'd have actually had it beat Ethereum. Hedera and certainly Litecoin, yes, Hedera did sort of 8x from Litecoin, but I don't know. I think this is new water, new ground, and we're yet to see how this sort of evolves. I think these cryptos are still in a very early stage, and ultimately we'll get, further clarity on this. But the Solana ETF, you've got to give it credit, the Bitwise Solana ETF, and there's other. I think the Grayscale Solana ETF is launching today also. So somewhat some disappointment, certainly for Hedera, and perhaps certainly Litecoin. But a good start, a step in the right direction, and ultimately this is in broader sort of trend with the financialization of the space. And of course, today the Fed is set to cut rates. They'll be doing a post-FOMC meeting that's going to be interesting in regards to further guidance. The Fed is likely to keep cutting interest rates, but multiple dangers lurk, CNBC survey finds. Now, the only 2 years in the past 50 years the Fed has followed this playbook in regards to not lowering rates and then lowering into the end of the year is 2024 and 1998. And every time they've resulted in a pretty explosive rally for the S&P. I think you're going to get a similar one now, which is in line with our broader thesis that the S&P is in a new bull market, and certainly technically what we're expecting. Interestingly, I was asking my patrons this question, what do commodities perhaps tell us about where markets are going? So given that context, what do commodities perhaps suggest? And there is a correlation between commodities, which of course are priced in dollars. There's been a bit of a discorrelation, but generally there's been a correlation between kind of assets and commodities. You can see obviously with the sort of March 2020 stimulus, just how they moved on the back end of devaluation. So what I'm perhaps suggesting here is that there is a correlation between commodities, which are priced in dollars, and assets. And actually, I think you're going to get what we would look at as a phase 2 or a breakup for Aberdeen's Bloomberg all commodity strategy. I think aluminium, in my opinion, is going to run to 3,308. That's the target that I have for it. This is very much coming out of an accumulative phase and to the upside. And soybeans also looks to want to break out. And I would definitely argue that, these are priced in dollars predominantly, or this is how we're looking at them. And if these are going to go up in value, I think this generally is a barometer for fiat devaluation, which should be positive for assets at a time when we're expecting assets to do well. A little bit of cross-market sort of pollination, I guess, or sort of valuation. So very interesting. Last little bit of news. I think people are a little bit worried with the Fed cutting interest rates about inflation. This is a really good take. Amid ongoing questions about inflation risks, I want to take a closer look at the latest data to see if there's any signs of an escalation. CPI and core measures have shown some movement, but it's unclear how persistent these trends are. Tariffs and other factors could be influential in prices, but the impact isn't obvious from headline numbers. I'll share some charts below that might help evaluate the ongoing situation. And this, of course, is CPI. This is core CPI month on month, which isn't showing too much. This is US goods and servicing. This is US super core inflation. So this is core service and shelter. This is Dallas Fed trimmed means PCE inflation rate. This is Cleveland's Fed trimmed mean inflation, Atlanta's sticky price CPI, Atlanta's Fed wage growth tracker, 5-year forward inflation expectations. Bottom line, despite some isolated signs of pressure in goods and supercore inflation, most indicators including core CPI, sticky prices, wage growth, and inflation expectations show very little upside. Overall, there's no clear evidence yet of broadening acceleration in inflation. Whether we see that or not is still to be seen. But what we don't want is we want things to happen in an orderly fashion. When people talk about rate cuts, the fear is in some cases, the Fed's cut rates because an emergency situation has happened, and that's part of them having this elastic currency. I don't think we have an emergency situation at the moment. I think they're cutting in, and I think that generally should see assets do quite well for fundamental reasons, but we shall see. So we're very bullish on the markets. There's a lot going on. You've got a generally bullish environment for kind of markets, crypto beta of markets, and you've got this great fundamental story and picture that we're going to be finding out more at this conference over the next couple of days, sort of taking place. And I think when he walks, talks, and quacks like a duck, it's a duck. That's it from me, ladies and gentlemen. I'll see you all in the next Daily Market Update. Thanks for watching, guys. See you soon.